Mr. Hanna, you're able to do drugs during the day and still function, still do your job?
Well, how the fuck else would you do this job? Cocaine and hookers, my friend.
It's Saturday once again, and sure as death and taxes, here comes another weekly market recap. And quite honestly, I'm a little bit surprised about myself. I didn't know how long I could have kept it up, but it's almost 2 years. It will be 2 years in August, I guess. So yeah, 2 years of me rambling and saying stupid, dumb shit on the internet. Now, the week which went was a bit dull from my standpoint. No huge surprises, no huge news. I think markets in general are starting to detach a bit from all the headlines from the Strait of Hormuz, Iran, the war, and all the rest. And quite honestly, I'm pretty much happy about it. So we can get back to real fundamentals. Also, we are in earnings season for the stock market, which again might be a bit more insightful when we get to the other side of it. So, even on the economic calendar, there wasn't a lot. The only real data I paid attention to was retail sales, which came in as a huge beat because the number was good, 1.7, although, again, for the same period, I think inflation month over month was almost 1%, 0.9. So, you strip that away from this one and you get what? 80 basis points. So is it a lot? One thing which for me could be interesting is that we are in March 2026 and we have a similar data point compared to what we've seen when? March 2025. Do you remember what happened in March 2025? Well, basically, we have been hearing a lot of talking about tariffs here, tariffs there. So naturally, what people do ahead of something like that, which could come, they front run their purchases because they think that those prices they can afford to buy things now will be much higher into the future because of the tariffs. Because, there was this conviction that tariffs were inflationary, massively inflationary. Now, as it turned out, they weren't. Inflation that we are seeing now is due to energy crisis going around, but it wasn't the tariffs, right? So I was just wondering, could this be the same type of phenomenon playing out right here? Like, we got the oil shock, energy is going up. You go at the pump and at the gas station, you see prices going up. You know what's happening in the Middle East. So, if there is something you want to buy or you needed to buy anyway, and you were thinking about it, might just well make the purchase now because with all the things going on, who knows? Maybe prices will be higher into the future. I had to buy the thing anyway, so I'll be doing it now. And maybe again a little bit of a front run of future demand being pulled into the present, which again helps the economy out, sustain aggregate demand, but there will be a give back period, as we've seen in here, right? If everything you wanted to buy or you needed to buy, you already bought it, we just shifted the timeline for the purchases, but at the end of the day, net, you give it another few months and you should see either confirming or denying if this is some sort of front running or not, right? I do think it might be, right? Just, it's just simple human psychology at the end of the day. So I really wouldn't read a lot into it unless, you have a sustained trend, like, for instance, like it was in here, right? When you see a lot of positive prints all stacked up together, then maybe you can come up with something more, more definitive. But for now, we could call it an outlier. For now, again, we'll see. And other than that, Michigan Consumer Sentiment Survey, which again, historic lows. Now, look, it's always the same thing with consumers, right? So it ties in a little bit with these, right? If the sentiment is so low, and you could throw at it whatever other type of sentiment survey you can think of, like the one about labor conditions, the one about financial conditions, and they are all pretty low for now. So people are worried about the future job situation. People are worried about their financial condition, and a good chunk of the population is saying that those conditions, financially, they are worse now compared to what they were 1, 2, 3 years ago. So at the end of the day, it might take a few months. Usually, as far as I read, sentiment data, right? They take like from 5 to 6 months to be actually showed up in the sales data. So consumers start to feel a bit chilly about the future. They pull out, and they kind of slow down the consumption, which in time is reflected into this one as well. So we'll see about it. Other than that, the other data, not really interested. We had a flash PMI, I think, but I'm more interested in what will come out next week. As for the ISM manufacturing PMI, and so nothing else on the econ calendar for me. So the break evens, it looks like now the blue line, so the 10-year break even inflation rate, is trying to break out from this structure that we were looking at last week. The most or the more short-term gauge of inflation still grinding higher. So again, could this be right? Again, I think at the end of the day, and we might talk a bit more of it when we get to the oil part, at the end of the day, it's just fear for now. I don't see sustained inflation to be present in markets or, in the economy as well. But just give it time, and we will know soon enough. Like, after the summer or, in the midst of the summer, we will have most likely a few more solid data to either confirming or denying this one as well, right? But for now, it is what it is. It's not surprising in the short term, right? Oil at the end of the day, it's still trading around what, 90, 94, 90, 96. The WTI, Brent is even higher than that. So, and then there is all the worrying about fertilizer shortages, and therefore food inflation. Did I say food? Well, it was food, right? Food shortages, food inflation, right? So it might be that these inflationary perceptions for the future might tick a bit higher right now. But at the end of the day, if you look at the core, right, they are not moving a lot. The different core data, right? So core CPI, core food inflation. Food inflation. I'm stuck on these food inflation, right? No. Basically everything which strips out food and energy, so the rest of the economy, because again, you might need to pay more for food and energy, but you have a limited amount of income on a monthly base, right? So if you spend more on what you need, you will spend less on what you want. So discretionary spending should go down at the end of the day. Same situation in the 5-year forward inflation expectation rate, which really went up this week. Look at that. So it might be because we should have had negotiations and talks. Potentially, the Strait of Hormuz was allegedly open last Saturday for like what, 3 hours maybe, and then it was shut down again, or maybe it was never open for real. But again, more on that when we will talk about what came out from the energy market and oil, right? Again, we are talking expectations, so it's not really the Bible or it's not a crystal ball. But again, for now, it could impact consumers' behavior and therefore aggregate demand. So it's not totally worthless to pay attention to it. As for the Fed watch, pretty much same situation as last week. Maybe 1 percentage point shifted from the right column back to the left column, but no cuts inside. This week we had a hearing at the Senate, I guess. Pretty interesting. He said he would like to review how things are managed at the Fed. First of all, how they run the balance sheet, and he came up with a few talks on inflation metrics. He thinks that stuff like we currently look at, namely PCE, are not the best way forward, and he was proposing some sort of a median of sorry, I didn't pay attention, but a lot of nerdy words to say we need to change the metrics. And by the metrics, he would suggest to introduce, replacing the current ones, inflation is actually lower than what the measurement for now would be reporting. Is it again another scheme from the government to make you think that you're not suffering the real inflation you're actually suffering? Maybe, maybe not, but it is what it is at the end of the day. And that I thought, I think if it wasn't for oil and for the situation in the Middle East, that type of hearing from Walsh at the Senate, it would have moved markets a bit more, because the market is always trying to understand what the Fed thinks, right, in order to front run it and take advantage of the of pricing in future monetary policies, right? But with the energy crisis going on and the inflation worries, maybe it took the back seat for a while, all right? So I think that's really all there is on the fundamentals and economic calendar front. So let's jump into the charts. Now, having a look at the DXY, as usual, we've seen that bounce. At the end of the day, it was pretty telegraphed, in my view. Was it a bounce? You should have bet the farm on it, but no, not really. But I mean, it's just natural to expect a tiny bit of reaction at previous levels, of resistance in here, resistance, and then, broken. Same talks as last week. But the bounce was kind of faded on Friday. I think, at the end of the day, yesterday, I went out and I didn't pay attention to the news this morning, but it looks to me, if I read it correctly, that maybe there are hopes for negotiations and talks this weekend in Pakistan. So maybe, just maybe again, big if, as we've seen throughout all the week, right? But maybe the dollar, the DXY, sold off at the end of the day on a Friday, on some sort of a relaxation. I think, again, at the end of the day, the market is trying to shrug off all these talks because, look, put yourself in the shoes of the market. One way, you hear one thing. The other day, you hear another. Then next week, you hear another one. And, one side says whatever it wants, and the other side kind of denies, and it comes up with its own side of the story. And you could, how long would you go ahead with that? The market will stand it for just so long, maybe 1 week, maybe 2 weeks. And at the end of the day, they will say, fuck it. They can talk all they want. Nothing is really changing. So I will start to price in these things based on other facts, something which might be a bit more reliable. And then, that will go on up until the point something really happens, right? And then, again, the market may get back to take those things seriously when there are material developments rather than just talks. So I think maybe a little bit of that component in the DXY selling off, or, was just a bounce. We are now working on, we made a higher low. Could this be, a lower low here relative to here? Could this be the lower high relative to this one? And we keep on drifting lower on the DXY. Still, I got my reservations on it. It's, I reserve the right to revise it because I don't really think we are going to go much lower for now, right? We're still in the middle of this range, so don't see any reason to be overly bearish or overly bullish in the short term. Just neutral for now. Obviously, as many other times in the past, even this week, there were those guys talking about the dollar doom, the end of the dollar, the deficit, the debt, and all the rest. But when you look at this chart right here, right, you see that the dollar at the end of the day, it's basically at the same levels it gravitated around from the late 70s. So is it really a big deal? And quite honestly, you could say, well, when it comes down, it's not de-dollarization, right? And when it goes up, could it be then de-dollarization? The logic is pretty simple. You need to think about that in terms of supply and demand. Why is the dollar going up, right? There is more supply and demand than there is supply. I'm really talking backwards this morning. So more demand, less supply, price goes up. And why there should be less supply relative to demand? Well, maybe since it's a fiat currency and it's lent out into existence, maybe there's not enough credit expansion. If there's no credit expansion, there is no new fuel for the economy to generate new aggregate demand. And if there is no new aggregate demand, there is less of what? Trades. In global trades. If there is less global trades, all those countries outside of the US which contracted dollar-denominated debt and liabilities, they cannot roll them over or pay them down because they don't have access to the same amount of dollars they had before. So what do? Well, they go on the open market and they do acquire the actual dollars by selling their own local currencies. Dollar goes up. So in that sense, when you see the dollar going up, it could be seen as de-dollarization in the sense that there are less dollars available, right? If it gets to some points like it was in this one, when we get the Plaza Accord, I guess it was, where the dollar was willingly devalued, right? And then it gets easier to get access to it, or it's not as painful to pay down your dollar liabilities. So if it goes up at this rate, that's real de-dollarization, because, whether it's a willing process or not, you are not getting access to dollars, which is usually not good considering how the system was structured, right? But when it comes back down, that's actually re-dollarization, because you have more dollars availability. If you got more dollars, it's all cool. People will keep on using it. It will keep on flowing throughout the financial system globally. Economies will be good. There will be more credit expansion, because whether you like it or not, or whether you like to think the BRICS are actually winning, when it comes down to financing and to international trades and settlements, the dollar is still the big daddy for now. Might be different in 5-10 years, who knows? But for now, right? So again, I think de-dollarization actually happens when it goes up. Is it happening right now? Probably, to some degree, right? Maybe this is why we got the question marks. But sure as hell, there is no de-dollarization just because you see the DXY going down. That's not the death of the dollar. Actually, that's the system perpetuating itself. Therefore, keep on being based on the dollar, right? Plus, if you actually look at the data for once, what you see is that, when it comes down to US securities, it looks like it's not that bad, right? I mean, beside November 2025, which was an outlier, but even February 2026, there was a good amount of money which came from the rest of the world into the US, therefore into the US dollar denomination. And why would you do that, right? Why would you if the dollar is dying, right? If the empire is crumbling, why would you put more money into US markets or into US assets? Well, at the end of the day, for me, it's just growth and earnings, right? Plus the fact that, being the global reserve currency is still a plus. Again, no matter how you look at that, doesn't matter what I think or what you think. If the rest of the market still thinking this is a safe haven for now. So yeah. How many? It's kind of like it's another one of those narratives where it really makes me laugh. How many times, Bitcoin have been declared dead? There is actually a counter on the internet. Well, many, many times. And every single time it came back from the dead, right? And it's still there. Now, that logic applies to Bitcoin, which in the minds of a lot of people is a replacement or a competitor to the dollar, right? But somehow, for some strange reason, it doesn't apply to the dollar, which has been around way more time than Bitcoin, is way more adopted, it's way more spread out in the world, it's way more used, and it's been declared dead starting from the 80s, right? So, make up your mind, bro. You can't have it your way just when you like it, all right? Now, moving on, the other currencies, what did they do? Oh, they pulled back a tiny bit because of this bounce in the DXY. So the euro, obviously. I mean, it was an area which was prone to offering some rejection, as we were discussing last week. The pound, British pound, stayed relatively more stable, but still pulled back nonetheless. The Japanese yen is still deciding whether it wants to die or not. For now, let's just say the patient, it's comatose yet. It's not dead, but it's not looking good up until the point we don't start to reclaim levels like 157, 156. Yeah, man, still looks bearish. What else? Dollar Canadian, we were looking at the pounds, still progressing. It looks now we reclaimed that apex space now. We traded into it. We came back, testing it. And for now we're holding it. So who knows? Might be that we do actually see it holding it. For now it looks like it, so would be pretty positive. But now up until the point we lose it again, right? But up until the point we can leave above this level, that should be good. Swiss franc, kind of the same. Found rejection in here, but it's still constructive, right? Up until the point it doesn't really fall off the bed, but it's still looking constructive, right? The same way it came down, could actually go up, slowly building and then going up, right? And up. Sure, as soon as these kind of a behavior stops, like say maybe you have another bounce, and it's faded, and then you may say, well, got something else coming, which could be, if you zoom out, getting back, testing this long-term trend line right in here, right? And then we'll see what, or it could just be starting to go into consolidation in here and staying relatively flat. We'll see about that, but there are not many things which could happen, right? A market can either go up, down, or sideways. So for now, I would say it's still constructive. Probably another try higher, but we'll see next week. The others, so Chinese yuan had a little bit of a pullback after the huge pump previous 2 weeks. South African rand found resistance again at this old level right in here, right? Which again, it's normal. We tested back in it twice now. So now what? Can we hold in here? And then, maybe trying to reaccumulate around here and pushing again. And this time around, we get to the usual topics of, third times is a charm, right? We'll see. Russian ruble made new, it took out these highs, no new highs per se, overall. But, again, that was a good V shape at the end of the day. So keep on staying bullish on this one in the short term. It looks like we still have the momentum for now. Up until the point, imagine a trend line in here, right? Going up until the point we don't break it, should still be on the go. At this point, I guess there will be the time to get into a bit of a consolidation, maybe, but, for now, still looks good. Indian rupee is another one, kind of like the Japanese yen, which I don't know, it can it cannot bounce. Doesn't matter, but yeah. And we were talking about the BOJ. You remember last week, the BOJ actually thinking about intervening in the FX market. What about the Bank of India? Well, actually, I guess they tried out 2 or 3 times over the last 18 months, and it doesn't look to me like the results were impressive. So, still overriding factors, selling this thing down. You might, if you want to have a lot of hopes, you could build up a case for these to offer up a bit of support, but I wouldn't hold my breath for it, right? So what's next? Brazilian real, nothing to say. It's kind of like the Chinese yuan. It keeps on being bullish, so don't fade it, I guess, right? Unless it's a day trade type of setup, but over a long enough period of time, it's not a good idea to fade it, right? Then what? Australian dollar kept on grinding higher. I think a little bit of a pause in here would be good, like consolidating these gains above new, recent highs. So building up volumes in here, creating, there are a lot of terms, but acceptance, that's another one you could throw at it. There is a new volumes, a new dealing range, acceptance, building structure, whatever. It's always the same. Many different words to basically describe the same behavior, right? Now let's have a look at gold instead, which, it tried once, twice, 3 times. And look, that was the momentum off of, the bounce after the huge liquidation. So I'm a little bit turned right in here. What did we do? Did we just break the momentum higher? And therefore, we need to pull back a tiny bit and seeking a bit more of liquidity lower, like in this level maybe. And then from there, what? Can we bounce and tackle this area again? Or do we just, show weakness around it and eventually we just fade to the downside? I don't know. I'm still thinking gold at the end of the day over a long enough period of time, like long term, but we are talking months here. It's still bullish enough for me. Although, maybe we build up a bit more in here before the next leg, which again, I would, gun at my hand, I would say to the upside, but in the very short term, again, I still think up until the point you don't make new lows, right? You should still be kind of bullish on this one, right? Now, again, you break this low right here, these lows on these huge liquidations. Then again, at that point, I might start to reconsider. But quite honestly, if we can really go sideways in this range for a while, that wouldn't bother me for the long-term bullish view on it, right? It's just, look at the past, right? Sometimes it can happen, right? In this segment right here, it was from mid-April up to what? August. So, how much is that? 4 months? 3-4 months? Something like it. And we have been in this range basically from the top, and then there was the initial retracement right in here. So February, and we are now almost at the end of April. So, 3 months for now. Could this go ahead another month? Potentially, yeah. But again, points of invalidation for the long-term trend for me would be this one to the downside. And of course, as it was previously reclaiming this level right in here, right? Uh, that would be the green light to start targeting new highs, obviously, right? So, slightly neutral in the short term, still long term, kind of bullish, and we'll take it as it goes. The other metals are pretty much the same. You could just copy paste what we were talking about last week. Yeah, I mean, copper still showing relative strength compared to the rest, while palladium and platinum showing relative weakness. Silver staying neutral. There are rumors that China is starting to buy up a lot of silver. I don't know. I cannot confirm. I can just look at the price. And for now, it looks to me like there is, like, at least this past week, didn't see a huge buying spree in this one. Now, again, you should always consider these are the futures, right? So it might be conditions could be different in the actual spot market or the physical market, and we have been hearing a lot of that about gold, about metals, and now we are hearing about it when it comes down to oil. We look at the price feed about WTI and Brent, and then people report that actually in the real world, if you want to purchase a barrel of oil from, I don't know, Dubai, right, you have to come up with $140 upfront in order to get it. So which price is telling the truth, right? I honestly, for me, and I guess maybe even for you, if you are speculating, if you are trading, these are the feeds that you should look at, because, at the end of the day, you're not really dealing in actual barrels of oil. So who cares? Other than that, for the real economy and real life and real world implications, yeah, I mean, I get it. I could agree on the point that what you need to actually pay for it is what should really be impactful. But look, at the end of the day, maybe we are not deep enough into the crisis, the shock, whatever. For now, we are still waiting for the real implications to manifest themselves, both again for gold, for the other metals, for oil, and yada yada. Let's have a look at Bitcoin instead. Oh, again, Bitcoin. We were talking about it over the past few weeks. Never really broke this momentum to the upside. And sure, look, it reacted to previous areas or areas of anticipated resistance. Sure, short-lived reaction on the bearish side of things, and then again trying again higher. Now, this level we tested in, I think that's relevant because it comes back from here, basically. So it was that pocket which originated a huge run-up that we've seen in 2025. And, when it was broken in here, I see quick break, retest, and another leg down, that's what kept the price suppressed for basically, since February 2026, so over the last 3-4 months. Can we reclaim that? Then again, we could start thinking about filling in this inefficient leg to the downside, and maybe, it's a risk-on type of a scenario. The rest of the market will keep on performing well, and we will see Mr. Bitcoin here actually getting some love. To me, it's kind of easy at this point. As soon as we break this momentum, right, first, and then we break structure in here, then this move kind of ended, and we need to start thinking about testing back into these lows right here. Okay, but yeah, up until the point it doesn't happen, nothing forbids it to keep on grinding to the upside. And again, the same good old talks about a market which is going parabolic one way or the other, like this one, right? And a market which is slowly grinding and building and moving efficiently. Still, again, I think a little bit of an analog could be, derived from this one, down leg, consolidating, bear flag, down leg, consolidating, bear flag, down leg. But, I do also think there should be some sort of a time component on it, right? Like these flagging behavior in here lasted from basically when? From here up to here, right? So 70 days. With this one, we are now at what? Almost 80. So, the more it drags on, the more I start to believe probably it's not going to be this type of flag. Now, again, 10 days here and there, 10 days difference. Is it a huge difference? It's not when you look at higher time frames, but I guess the bottom line would be, look, if you still think this is a bear flag and we have another leg down, it should come relatively quick now. I mean, sooner rather than later, right? Because, otherwise, even then sentiment will shift and the bulls will get back the ball in their court, right? So, again, same as last week, slightly bullish tilted, although at the end of the day, don't be surprised if you have these sharp down moves, right? Which, again, could last 1 day, 2 days, but up until the point the momentum is not broken, you could still try to, if you are in a position to keep on maintaining it, to add to it, or if you day trade it, wait for the market to get back, in here and open up longs and try to hold them for a few hours or maybe a day or two, who knows, right? It depends on what you do, but, that would be how I see it. Let's have a look at yields, which didn't really move, right? No. Again, I guess moving with inflation expectations for the most part. There is still that argument for, as we were looking at with, what was that? The Australian dollar, right? So V-shape, now we're building up structure, like acceptance, volumes, whatever. At these levels, maybe we're going to have another leg up. Who knows? It depends a lot, in my view, on what's going to happen on the inflationary pressures side of things, the energy market, the situation with the geopolitics and all the rest. But, it's useless to deny that for now, they tried to go lower. And again, same levels. They were rejected higher, and they're now holding higher. So, I wouldn't be. I mean, I cannot. Although over time, like on a macro scale, I do think we are going to see a bit of disinflation later on. But the short term, when you see a market going like this, again, don't fight the tape, right? It's kind of like when we were talking about not shorting the stock market. Don't fight it, right? Just go with the tape, not against it. Which is why for now, although I do think the fundamentals should over time bring yields a bit lower compared to where they are now. But look at the 10-year, right? You got your leg up. Now, assuming it keeps on going like this, right? It looks like we are trying to work on a little bit of a rounded reaccumulation. It's kind of the same with the long end. If you check this out, you got the same V shape, and you got the spike in here, so the exhaustion, and then what? This is actually even more bullish because we are working on something like this, right? Some sort of a wedge, and up until the point we don't break out of it, still could go either way. But since we are operating on the premise that we just V-shaped recover, this down move, naturally, the pattern would suggest an upside resolution. Will it be like that? Maybe. Who knows? In the short term, it could be. I don't have a clear opinion on bonds for now, therefore on yields. Speaking of the bonds, again, see that? We got the drop. Sure, we drew back the last part of the drop, of the exhaustion right here. But we, on a daily basis, if you look at a very important structural high, like in this one, the last high before we broke very important lows, right? Before we broke these lows right here, right? This, and this, we got these high, right? So in order, at least the way I see it, right? Now for you, it may be different. I'm just telling you what I see. In order to say, okay, we now shifted from bearish to bullish, I would need to see price coming back above it. Now, taking out this one would be a good start, I would say, but this one is key for me, right? Which, for the others, it would be this one for the long end, and it would be short end. It's a bit different because, wait a second, you got this old base right in here, which was broken. Okay, let's say, could put it like this, right? Well, in this case, it's not really this high because at this point we already broke below these lows. So in this case, I would say that getting back about here, right? Reclaiming the old base. That's it, right? So probably not going to happen in a week or maybe two. If I can just, okay. But, on a medium term type of time frame, I would say that's what I would like to see to confirm, right? Lower yields. Up until that point, the slow grind looks like a pullback, and probably. I mean, it doesn't mean that you can long them, right? It's kind of the same talks we had with Bitcoin up until the point it goes up, right? It goes up. So every time it gets back into these regions right here, you might say, well, you know what? I'm going to give it a go on the long side. Sure. But what, like it looks like what it's doing here. What happens when we break this current momentum to the upside, right? So, if you are playing it on the long side, don't overstay your welcome. That's the bottom line. All right. Now let's have a look instead, since we're talking about inflation, future expectations, inflationary pressures. Let's have a look at oil. Now, oil opened up the week, gapping up and basically reclaiming this range we are still operating in, right? And again, do you remember what was kind of the caveat for the entire week, right? Favor the bearish side up until the point we are below the EQ and below this high. It looks like the market negated them. So at the very least, you should still think that for a good period of time, could be a few more days, maybe a few more weeks, who knows, but we are still operating in this range and we are still gravitating every single time back to the EQ of the range. So it looks like the market established a new fair price for oil, which, for better or worse, is in the low 90s, right? So 93, 94, this EQ right here. At the end of the day, it's not necessarily bad. I'm going to tell you why in a second for me. But, now in order to hope again that we can have lower oil prices in the future, you need to undo this move right here. So starting to create a lower low and a lower high, having these move basically dismantled. The week opened up with a gap, right? And as soon as you see that, the market is trying to get back into the gap, but look at that. It's always finding buyers in there. And again, you see the same type of, rounded reaccumulation. And you have the spike. And when you have the spike to the upside, you might say, well, okay, but maybe we are just filling this old gap right in here, right? So we fill it, now we come back lower and we go lower. Yeah, sure. If not, then again, you use the same level you were accumulating at to bounce up and keep on pushing higher. So if it wasn't on Monday, right? Monday, Tuesday after the reaccumulation, but when you get to Wednesday and you see that we bounce again in here, at that point, for the rest of the week, you don't short it, right? It's just the market. It's giving you all the clues that it doesn't want to go lower, right? Now, I normally try to assess things as soon as I can throughout the week. So usually Monday, Tuesday are already kind of telling for me about what the market will try to go and do for the rest of the week, and therefore giving me a bias on, should I favor longs, should I favor shorts, should I hold on a bit more to longs rather than shorts because the market is manifesting intentions to go up. But if that wasn't enough, Wednesday, you actually have the final confirmation that probably it's not going to be a down week, right? So I would say at the end of the day, there are pros and cons in having oil at these prices, right? The cons, it's kind of like Captain Obvious, but it's that you're going to pay more for stuff because price of energy is reflected all down the supply chains and therefore impacts all the things in the economy and all the prices of different stuff that you can buy, right? The silver line or the bright side is that although we are operating at a higher, for longer, it looks like oil prices, it's not that type of spike that we saw throughout, that first intervention in Iran, the bombing of the nuclear facilities in here, which was very short-lived, as you can see. This time around, we spiked, and then we accumulated, we spiked again, we came back low, rejected lower prices, and we are getting back into here. So, the market likes to gravitate around these levels. So compared to what we're looking at in February, decently higher levels. The good thing is that no matter these, it looks like for now the global economy is holding in there. Now, sure, it might be a regional factor. A few economies are probably hit more than others. And for instance, Asia, it's hit more, Europe, probably more, China and the US for now, not a lot. Same for, I don't know, maybe Russia, because it's an oil and gas producers, a net exporter, kind of like the US. So, the two biggest economies in the world are holding up. So that's basically the plus, or the half, the half full glass, so to speak. Now, I would say, look at this. For instance, why it didn't manifest itself in the tragic outcome everyone were expecting? Because no matter what, although we lost 20% of the global daily supply, which was transiting through the Strait of Hormuz, if you look, and bear in mind, these are estimates, right? That doesn't mean that these are precise to the tick, but just for a frame of reference, the red is what we lost as the daily output of oil supply, right? Because of the seal of the Strait of Hormuz. But then we had the Saudis using the pipeline to reroute their oil, right? So a part of that, although it cannot transit through the strait, has been rerouted through the pipeline and therefore got access to the Red Sea, and from there to the Gulf of Oman, and then to the Suez Canal and back in Europe or in the Mediterranean, right? Then we go, well, Iran actually allowed, although again it's all good and dandy to talk about the blockade and all the rest, but for a good chunk of time, even if you want to discard this last week where the US tried to impose a blockade on Iranian ships, right? But for the initial part of the conflict, ships headed to China, Russia, and India, they were allowed to pass. So again, they kept on maintaining these flows open for a while. Now, is the US Navy successful at actually blockading these Iranian ships now? They say they are, and there are confirmed reports of Iranian ships actually being seized, both in the Strait and in Asia. I guess they seized 3 tankers in the Asian seas. So they're really trying hard to choke the Iranian bloodstream when it comes down to the economy, right? But up until this point, the fact that they managed to keep the flow of oil out of Iran into other places, going, it was another thing which kind of set these type of loss that we got. And then we got what? For once, the SPR actually worked. So different countries around the globe, they released a lot of oil reserves into the market, trying to suppress prices, right? Now, sure, a little bit of what we've seen was also demand destruction, right? Because if energy goes up, and we get back to the same theme, it is inflationary up until the point it's not disinflationary, because there is a component of demand destruction. People will pull back if they cannot afford higher prices. They will stop purchasing that, either because they are not willing to purchase at those higher prices, or because they simply cannot afford them, right? So there is a lot of demand destruction in there. It's not yet what you would expect. If you just look at the shape of the rectangles, it's a good chunk, right? It's a good chunk. So, and I would, listen, if the situation keeps on going, I would expect these, I don't know how to name this color, but whatever, this one, I would expect this shape right here to be a bit larger than what it is right now, okay? So don't underestimate that, right? And then, residual net shortfall, yada, yada. But, if you want it in a written form, look at that, right? So again, it's basically the same. Oil flows being rerouted, strategic reserves working. China came in loaded, which is true, right? And again, because I do realize, right, even last week, I don't want to sound like I'm partying for one side or the other. I'm cheering for one side or the other. I try to understand what's going on. And again, I keep on thinking that I'm still thinking that a lot of these was made to kind of send a message to China, right? We can blockade the choke points of the world. We have the best navy in the world. We can do it. So, if you want to negotiate with us, just bear in mind that we could do this and that. But, the other side, it's not some sort of a immobilized or paralyzed type of agent. They will try to come up with countermeasures. And it looks like most likely, since the Chinese are not stupid and they saw what the US did in June 2025, they accumulated a lot of oil reserves just to avoid something like it. So for now, China didn't really feel the hit, right? Doesn't mean that it couldn't if it keeps on going for another 3, 4, 5, 6 months. But for now, they managed to insulate themselves as the best they could. And it looks like they managed to for now, right? And again, it's easy to say they did, they didn't, they were successful, they weren't. Look, the long-term implication and impacts, which are actually manifesting now or taking place now, they will be evident in the data maybe 6, 7, 8 months down the road. We don't know it yet. It's impossible to calculate the damage which has been done to the global economy or to the demand side of the economy now. It's too early in the process. But, don't fool yourself in thinking that all of these is not going to have consequences in the real world over the coming months and potentially even impacting 2027, right? I'm talking especially, for those regions like US and China, which are not heavily impacted now. It's going to come. We don't know to what degree, to what level, but it's going to come. A little bit of impact, you're going to take it. And if you think it's just gas up the pump being a bit higher, I think there's going to be more than that, right? So, and again, the US was structurally insulated. So basically what we discussed so far, right? Now, whether you believe it or not, these are from the EIA, so potentially should be reliable data. But you look at the oil reserves or the oil inventories that countries had at the end of 2025, so basically getting in 2026. Look how much, look at what stockpile China built up. Right? United States, second place, but relative to China, they are a net producer, so maybe they would also rely on the fact that even if they don't have the same stockpile, they can still produce it and dig it out of the ground. Japan, as a country which basically imports all the energy that it uses, makes sense that they have a lot. Second place, Europe. Second, among those which are not the two superpowers, Europe, which, again, it's a bit hit for now, yeah. But we can definitely feel the pain. We're talking about canceling flights, keeping planes grounded. So, we are definitely impacted much more severely than the first two, and even Russia, but not as far as Asia or Korea or other places like India, right? So, this explains why the global economy maybe didn't feel the pain yet, because, China, United States, Japan, Europe, which, whether you think bad or good of Europe, still is hosting a lot of G7 and G20 nations. It comes down to, global GDP and whatnot. So maybe the effects are just postponed. Maybe we are just hanging in there for now. The point is that if you see this thing keep on grinding, the moment it starts to make or to approach back to the highs again, that's where I think a lot of people will shit themselves, both in the real world, but in financial markets as well, right? Now, just a quick look at the prompt spread, which ticked back a bit this week. It's not usually, we're around what, $5. At the peaks we were at 8, 9, so 5. It's kind of in the middle, but still, it's the same representation. We spiked, we remained at higher levels, we spiked again, and we weren't able to get back normal levels. So higher for longer, all right, maybe. It's a narrative that we have been hearing a lot when it was, brought up about interest rates, and we've seen that at the end of the day, that actually stuck. So, should you be worried? I wouldn't say be worried per se, but just, keep it in the back of your mind. Especially, again, for real economy implications. When it comes down to financial markets, as I was saying in the video, maybe not that much, right? Or maybe not now. But, we do also know that financial markets are not, at this point, are not a real reflection of the real economy. So, take it or leave it. Let's have a look instead at the stock market, and then we will wrap up the video. The stock market was, as expected. You remember we were talking about probably markets will try to grind higher a bit more, but it looks like this momentum where you got short covering, people FOMOing in, right? It may come to an end. Now, did it? Potentially not completely, but what we've seen as for the behavior in the price action was same gap down at the Sunday open. And then, we spent Monday basically grinding back toward the highs, right? And then there was another drop back into the weekly open, right? And this was the same pattern for all the indices at the end of the day, right? We get it in the NASDAQ, we get it in the S&P and into the Dow, right? Then again, Tuesday, same two-tape market goes up and then comes back down. It goes up again. All right. So, at the end of the day, if you zoom out, we got what? A little bit of balance, right? We were operating in a balance on all the indices pretty much, right? Both the S&P, the Nasdaq, and the Dow. Then, things changed a bit on Wednesday, right? So we got Nasdaq breaking out of this balance, right? So as you can see in here, it breaks this high. Wednesday, it breaks out from the Tuesday high. Throughout Asia, it gets back in it and it pushes again higher, right? The others weren't the same. Again, you see the same period this happens. The S&P still it's in the range. The Dow is actually operating on lower highs now. So again, if you zoom out enough, maybe let's go on the hourly time frame. So you see all the week, right? You got your weekly opening here, your gap down, right? And then this is pretty evident in here. You see that while the Nasdaq is breaking out of the balance, the S&P is still in there, and the Dow is actually, it looks like a short-term redistribution to some degree, but it just tells you that the relative strength is moving in favor of Nasdaq. So the tech sector is still dragging all the markets up, which is normal. Again, I've always been a proponent, or it's not that I proposed that. I didn't come up with it, right? Don't want to take credit that I don't have, but a subscriber to the thesis that in order to have markets really screaming higher, you need to have the tech sector leading the charge. It's not just a matter of the weighting, the market capitalization. It is also a matter for me of growth, right? Like technology for me is where exponential growth is, and therefore, growth also reflects where in earnings. And what, when you think about buying or selling a stock or holding a stock, what are you trying to do? You're basically trying to price in future cash flow, right? So, I do still believe that those fundamentals over a long enough period of time, they do stick, right? Now, if we zoom out and we look on the daily, what we see, S&P futures came basically at that level, 7,200. Nasdaq futures, for me personally, they exceeded that. I was thinking about 27,200. We kind of topped around there on a Thursday, and then on Friday we just kept on shooting higher. So, again, maybe I overestimated the mighty Nasdaq. The others, again, as you can see, the Dow Jones, it's lagging a little bit here. It's not making new highs yet. On the other side, small caps, they are behaving essentially like the S&P, pretty much. Although it's too short term to tell, but even this week, the S&P made new highs. The Russell didn't, right? Or did it? The week started. Oh, well, no, actually, it did. It just made new highs on Tuesday, while the S&P rallied in the later part of the week. All right, so intra-week rotation out of the Dow and the Russell in the second half of the week to get back into Nasdaq and the S&P. Okay, that's bad. No, that's not bad. I mean, for the two majors, right? Having a look at these other setup in here, these other layout, we are still operating on momentum because you see that the market tried to get back down. It pushed into what? The blue moving average, which I think it's should be an 8 moving average. So, the 8, it's still upward slope, providing support. Still, you see it diverging and, getting away from the 21. So the delta in between these two, it's still widening. Again, momentum is still present. And, sure, we are overbought, but as we said last week, the market can stay overbought way longer than what you think sometimes. Now, I mean, when I look at the others, like look at the Stoke, even this one, again, it just tells you sometimes it can stay elevated for a long period of time in a trending market. I would start to look at the MACD instead for the momentum, because when I see the histogram right here starting to fade while the market makes new highs, I think the rally, it's getting a bit weaker. Doesn't mean it's going to pull back tomorrow, right? Or next week. I'm just saying we are losing a bit of steam, right? Then again, we could keep on pushing higher, call it some sort of a weak rally, right? For another week or two, right? I'm just saying when you start to see this one basically getting into a situation where the histogram gets back to be relatively flat, that's usually the exhausting part of a rally, right? Like, I mean, if you look at it and you in reverse, look at that. It got pretty extended to the downside, and then you see slowly it tends to come back toward the zero line. And then what? And basically, that the downward pressure is over. The histogram turns positive, and that's where you start to see your huge rallies. So again, this time could big if you're not there yet. It's not confirmed, but when you see it reapproaching the zero line, it might be that time where a pullback is really about to start. Pullback, which would be good at the end of the day. I mean, if we could pull back a tiny bit, maybe retesting, could be the yellow moving average or the green, right? Testing into the old highs, right? Both for the Qs and the S&P. I do think, and I was discussing it this week, although intraday stuff, but I do think price is fractal, so it should apply on on a larger time frame as well. It might be that if and when the pullback will come, right, we might test a bit below the old highs, which is why I'm looking at the moving averages, and I want to see where they will be when that pullback actually bring us back down to levels which could be a good buy at the end of the day, right? Not now, obviously, but in the future, right? So for instance, just if you expect a pullback, let's say from here, which again, it's an hypothetical, doesn't mean the market will pull back next week necessarily, but just for the sake of explaining the concept of all-time highs, right? If you expect a pullback from here, right, I wouldn't necessarily sitting on the bid at the old highs, but I would wait for maybe a bit deeper than that, like in here, all right? The market naturally tend to squeeze a bit. Okay, so again, just pay attention to something like it. It is something which could help you refining your entries or your orders and even managing risk, right? Because you might say, oh no, the market pulled back, it closed a daily candle below the old highs, so that means that we failed. And therefore, I should sell everything because the market will pull back another 10%. No, it might squeeze a bit below the old highs and then immediately reverse. So just give it time. Don't overreact. Don't need your reactive thing, right? Just let the market do what the market needs to do, right? On the volatility front, what we see, the VIX at this point is back to 19, which is, again, good. Probably will keep on drifting lower. Sure, don't discard the fact we're still, again, pretty much in a market which is a headline driven a little bit. I think we are trying to shrug that off, but still, if we have a bombshell coming either from the President Trump or the Iranians or whoever, or oil immediately, I don't know, all of a sudden spiking 5% higher in a day, you will see the VIX moving a lot, right? So it looks like it's cooling down now, but again, market is overbought. Tensions, geopolitics is not sorted out yet. Oil prices, as we've seen, are still relatively high compared to recent times. So, I think the pullback should come. It just needs a catalyst, right? Could be whatever, right? So, just take it as it is. As for the sectors, first of all, let's have a look what type of week it was. No, it wasn't this one. It was this one. Okay, so we've seen, sure, staples up, technology obviously up, industrials up, energy up, might be because oil had that bounce. What was down? Healthcare, financials, utilities, communication. All right. So rotation out of healthcare, financials, and communication back into, okay, tech was already there. Staples, again, tiny bit of energy, industrials. What does it tell us? XLE at that bounce. All right. There you go. XLK showed new highs. Clear sky breakout. Materials. We're approaching the highs, but it's constructive for sure. I would like to see it breaking back above this apex base, but yeah, sure. For now, we had the pullback, and yeah, even in here, this could be a good example. All right. Although again, it's not the most perfect one, but it's a good one, right? So have a look at these old highs, right? So we broke out, as you can see in here. Now you see the market coming back, testing them, right? Bounced a little bit, and then it came back lower. And look, what do we have lower? We got this pocket right here, right? And below there, we had this tiny little shelf right in here, which was basically the last accumulation before the momentum really picked up. Now, why, even if you want to discard that, what we are interested in, it's the fact that the test at old highs is not necessarily what you want to look at, right? I think more often than not, the market will gravitate either to the last high before the run up, or, testing back into what? If you look at this spot right in here, what was that? Well, basically, this was the origin of the move, which started this down move. So after we reclaimed all of that, right? As you can see, we break to new highs in here, but look at this gap in here. There is no backfill into this one. So I think the market naturally tries to get back to areas where, there was, I don't want to call it disagreement, but there wasn't necessarily an agreement. There wasn't an auction taking place. Because in here, back then, we were, okay, we want to sell it, right? Now we got back above it, rounded retest, and now we get back to those same sellers, kind of like asking, okay, we are back again. What do you want to do now? I know it may sound a bit simplistic, but if you try to go and spot it, you'll see more often than not, it works like that. especially intraday. I really like it intraday. Utilities, they're going sideways. Not worrying, but not even enticing for now. Staples, which were up this week, as we can see, but huge run up. Looks like they got back in this range now. All right. See, this is what you could define as a temporary fail of new highs, right? So we broke above, and naturally you would expect price to maybe come back in here, right? And having a reaction there, somewhere in this region, whether it was in here or in here, but should have expected some sort of reaction. We failed that. We came back even lower toward the middle of this range, and we are so far unable to break out again from the old highs. So that's more what I would categorize as failure, and therefore the type of situation where maybe you start to manage your risk, right? Just to highlight the difference in between the two, different behaviors, different reactions compared to what you expect to see and what the market actually gives you, right? Communications, again, they went down, but still relatively close to the highs. You consider failure at continuation? Well, maybe. On the other hand, we had this huge pickup right in here. So if we can hold this dealing range right in here, we don't break back below this 113 level, I would say it's not bad, technically. Financials, still. Financials, if you look at that like some sort of a range, could you imagine it being kind of like, where do you put it? Yeah, I would pick this point right here. Right, this one. Yeah, I like this one. Right, was going sideways. We deviated to the upside, got back below range high. Transition throughout all the range, deviating to the downside. Now we are back into range low. Can we hold in here? I'm potentially working on something like this over time. It would still be in range, but at least it would be to the upside over the coming days. Who knows? And again, I look at the single sectors just for these 10 minutes when I record these recaps. I don't follow them constantly. So this is just me throwing shit at the chart. It doesn't mean I would place a bet on this or that. I'm just saying, this sort of if these and that type of scenario, right? And what XLV, healthcare. I don't know. I mean, healthcare as a sector, it's really struggling. But I've seen stocks in it which are not that bad. All right, like Eli Lilly, we're discussing it. I think Eli Lilly will report earnings next week. I think, yeah. So speaking of earnings and speaking of the market, next week we are going to have a good chunk of companies reporting earnings. So Amazon, Microsoft, Meta, Alphabet, Qualcomm, and then what? Yeah, Lilly on Thursday, Apple on Thursday. So, bunch of big guys reporting, right? So that could be another moving factor for markets. Obviously, as we discussed, everything is around guidance at this point because, look, the bit rate at this point is expected to be really high, right? So it's not just a bit. At this point, a company, it's not enough to just beat estimates. You need to either beat them in a stellar type of fashion and moreover, coming up with good guidance for the future. Because, of course, when you buy a stock, you're not buying the results, the earnings of last quarter. You are trying to buy what you think or what is projected to be the earnings of the next quarter or the next semester or the next year. So guidance, I think, will play a very huge role in these earnings, turn, right? That being said, what else? The risks for the markets, the concerns, well, of course, other than that, geopolitics, price of energy, which again, for me, it's not really a problem now, but again, if you see WTI getting back around 115, 120, that's where I think all the guys which bought the V shape and moreover, they piled in at new highs because that's really when the FOMO kicks in. They're going to see that and probably you could see that type of reaction. Shit, 1, 2, are we back again at these levels? Maybe we're wrong on these markets and, maybe they're going to be impacted right now. Because look, the thing for me was, okay, energy prices could go up. But how does it impact earnings and revenues for the Mag 7? I don't know, not a lot, in my view. So, at least, again, in the short term. In the short term, you will still see the CapEx expanding. New data center will be built up. And therefore, the market will see it as a potential grow opportunity into the future, right? So, since they are, operating in an environment which is, very power hungry, if energy stays higher for longer, sure, at a point they will be impacted. I'm just thinking that they are not in the short term, right? Which is why, again, the market kind of priced in the oil shock as a temporary event, as it was in the past. It will last for a month or two, and probably mid to late summer, we are back to oil in the 70s, and we are all good. Now, again, this is just the market pricing in what it thinks it will come into the future. Doesn't mean the market cannot go wrong, right? And that's where, again, I would say they could reprice things as quickly and sharply as they reprice them to the upside, they could do it to the downside. So, I'm not saying we may go for new lows. I actually don't expect that I say it. I mean, we're still, fuck it. We are still in April. It's pretty early in the year, but there I say it. I would assume the low for the year are in, right? Now, can I be wrong on this one? Sure. Why not? I absolutely can be wrong. But I will keep on running on that assumption that this was the yearly low, right? Up until the point we can maintain price action above the 200 days moving average. So for NASDAQ would be around this level, which translated in the future chart would be what? Call it 25,000, right? 24,900, something like it. And for the S&P, 6,700, more or less. Let's see if I have a match on the future chart. 6,750, something like it. Up until the point we are above these levels, I would keep on running on the assumption the lows for the year are in. Again, that doesn't mean you're going to have volatility, right? Sure, but maybe, look, and again, since we are talking fantasy, ETA, and, crystal ball type of bullshit, let's have a look at SPX, for instance. Now, running on the assumption that I have, right? Am I discarding that throughout the summer, we might start to feel the impact of higher oil prices, or even if it's not the impact in the US, but if it's going to impact the rest of the world, right? And 40% of the S&P companies' revenues are coming from abroad. If you have recessions or crises abroad, foreign demand for your stuff will go down. Therefore, that part of revenues will be impacted. So if we have a slightly reprise to the downside in projected earnings and revenues, I would expect maybe potentially, that we could see, the market maybe going sideways a little bit in here, and then, coming back lower a tiny bit, especially July, August, maybe even September. But, on top of that, you would have to put the uncertainty for the midterm elections, right? Because you never know what's going to happen on the policy side of things. And, after we got the clear picture on who won, who lost, or maybe nobody won, which is, I think, for the markets will be the best type of situation, because markets like when policies are not changing, right? And then you come into September, October, the results start to be pretty clear. You get into a good seasonal period for the market, and you rally into the end of the year, right? Maybe making new highs, right? So I'm not discarding you could have this level of volatility throughout the entirety of the year. But again, I would keep on assuming we got the low sets in, right? Up until the point, these area right here. Shit, let's just use a rectangle. Up until this area right here is defended, right? If we break back below it, at that point, I might reassess, but up until the point we are in this situation, this is where I would lean toward. And again, long term to me is all about this, right? It's just a matter of earnings. For me, there's nothing more than that. Again, would you say we may have another pullback, another 5, 6, 7, 8% pullback? Sure, especially because if you look at the breadth on this last push up, I know the tech sector, financials, they look kind of decent, but if you look at the index overall, the amount of stocks which are above the 52 weeks highs, 10%. 12 weeks, 4 weeks, you see that there are not a lot of stocks which are dragging the index higher, right? So, just keep it in mind. Because even if you look at financials and healthcare, which is pretty good weighted component of the index, sure, 46, 34, it's not that bad, but the index overall, it looks like the breadth, it's narrowing a tiny bit now. So I wouldn't discard a pullback getting into the summer, right? Now, that being said, I think this is more than enough. Nothing else to say for this week. So I'll leave you off with that. I'm going to wish you a very good rest of your weekend and a very good start of next week, which, pay attention, it's going to be quite eventful, I do believe, because, we're going to have interest rates decision, all right? And something else, ISM manufacturing PMI, all the earnings. So, GDP as well, some data on GDP, PCE. So expect volatility next week. But, other than that, just be sharp, right? And of course, be nice and be cool as usual. But don't ever forget, right? Neil's out.
Mm-hmm. 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 Come on. Mm-hmm. Mm-hmm.